More now on Malaysia's budget and what it means for business and tax. The government has allocated 332 billion ringgit, or roughly $80 billion, to drive economic recovery. That is the most it has ever spent in a year. It's banking on tax collections to fund the bulk of the budget and reckons economic growth will accelerate next year to between 5.5% and 6.5%. EY ASEAN and Malaysia tax leader Amarjeet Singh joins us from Kuala Lumpur with more. Now, with finances tight, how will the government raise money?
Hi, Amla. Thank you for having me here. Yeah, so I think that there are a couple of things, right? Number one, there's the expectation of growth in the economy by 2022. Malaysia is expecting to grow GDP growth at 5.5 to about 6.5%. And that's, I think, pretty much driven by the confidence in terms of, we've got 95% of the adult population vaccinated, 62% of the teenager population vaccinated. This means there will be more relaxation leading to recovery of the economy. Further, there are introductions of new taxes and excise duties. These appear to be in line with some of the global trends. So headlines in terms of taxes is, number one, removal of the exemption of foreign source income. So about a month ago, the EU Council put Malaysia and Hong Kong in the grey list because we appear to be the only two countries with foreign source income exempted. So that's now removed. There is also increase in stamp duty on shares traded in Bursa, nominal amount though, but I guess it's akin to a consumption tax, so from 0.1% to 0.15%, and also removing the 200 ringgit cap. There's also a prosperity tax on corporations with taxable income of more than 100 million. So again, seems to take a point or some learning from the OECD. Right. BAPS applies to MNCs with above a certain threshold in terms of revenue. So similar concept being applied here.
Yeah, there is also talk of a new digital tax and an increased tax rate on the rich. What is your take on that?
So digital tax, really, it is, I don't think it's a big amount. It's really the removal of the sales tax exemption on low imported goods. So there was an exemption today. If someone imports up to about 500 ringgit worth of goods, there was an exemption. So that is being removed. But Malaysia has entered into many different treaties. So my guess is the preferential rates within the ASEAN countries and the whole exemption framework will still work. So I don't expect this to have a major impact on corporations and on the economy in general.
So not much of an impact on these new taxes affecting small and medium enterprises. It's not going to help them much?
So so really no real taxes on the small and medium enterprises. Actually, it's the other way around. It is companies that have a taxable income of more than 100 million. There is the corporate income tax rate on that will move up to 33% on the 100 million mark and above. So 24% is the headline tax today. So for corporations that have taxable income of more than 100 million, the bid on the 100 million is now subject to 33%. So the SMEs are not likely to be impacted by this. In fact, I think the SMEs this time around seems to be the focus of support. So about 1.8 billion ringgit has been allocated to micro, small and medium enterprises, especially on their funding needs. So the government had actually did a survey, and appears that the SMEs really, one of the biggest need for them is really funding. And the response is this 1 ringgit being allocated, moratorium in terms of payments of loans up to 12 months, interest-free loans. So they seem to be, the focus of recovering the economy.
All right, thank you very much. That was EY ASEAN and Malaysia tax leader Amarjeet Singh live from Kuala Lumpur.